It is a great pleasure to join you for the launch of CCAF Regulatory Knowledge Exchange. As UN Secretary General Special Advocate for over the last decade, I witnessed the remarkable progress that digital financial services and digital public infrastructure can bring. Since 2011, a quarter of the world's adult population has gained access to financial services, and 3/4 of adults globally are now financially included. Yet, to reach the next level, more work is needed. For these services to be truly impactful, they should meet customers' needs, actively help build their financial health, and enable them to seize economic opportunities. Today, 3 out of every 5 mobile money accounts are inactive or dormant, and the active use of savings, borrowing, and insurance remains limited. Fintechs are already tackling this challenge. Fintech startups are offering more tailored, faster, and cheaper products. They're often partnering with banks and mobile money providers to better serve their users. Fintechs like ShopUp in Bangladesh, OmniBiz and Flutterwave in Nigeria, and Bazaar in Pakistan are helping entrepreneurs digitize their inventory management, marketing, payments, credit, and sales in partnership with banks and telecoms. This has helped small businesses expand far beyond their brick-and-mortar origins and connect to a much wider world. But these innovations require new regulatory tools, both to foster positive outcomes and to address risks such as cyber attack, privacy breaches, big tech domination, and algorithm bias. And many countries lack the resources and skills to assess and balance the risks and opportunities. That is why the work of the Cambridge Centre for Alternative Finance is just so valuable. In 2019, my FinTech working group, together with the CCAF, issued a report to help regulators learn about and address these challenges, especially in developing and emerging markets. It contained a number of insights. One is that regulators need to be open to innovation, and there are a range of options to do this, depending on experience and resources. An early approach can be to create an innovation office. Kenya's Capital Market Authority, for example, judged that this was sufficient to resolve the regulatory questions of most fintech startups. That can lead to more complex approaches. For example, the Monetary Authority of Singapore, early experience with the Innovation Office, allowed it to develop a regulatory sandbox and to explore new RegTech solutions. Another insight from the report was that interagency coordination is crucial. Many financial innovation cut several regulators' mandates, and collaboration is needed to make regulation effective. In the Netherlands, for example, the Central Bank and Financial Markets Authority jointly run a single innovation office, allowing them to speak with one voice. Finally, while improving the regulatory environment is crucial, for digital finance to thrive, we also need supportive policies and infrastructure. Greater connectivity and digital IDs can increase access to financial services to millions previously left behind. Fair competition and interoperable payment systems can help markets work better for even the smaller scale customers. And cybersecurity, data governance, and digital literacy can help marginalized communities navigate these changes in ways that work for them best. At every stage of innovation, let us ask how it will impact the lives of the poor or underserved, and how can innovation make their lives better? What can regulators do to incentivize innovation and create the space for it to flourish through tech sprints and design challenges? This means thinking differently about consumer protection. For instance, how will these innovations affect redress mechanisms or ensure sufficient disclosure? Could authorities include that regulatory expectation that financial services not only do no harm, but actually actively do good. Around the world, we see inspiring examples of infrastructure being developed in a way that works for ordinary people. The Indian stack, for example, combines ID cards, a payment interface, and account aggregators in one easily accessible platform. We can also learn from Brazil's interoperable payment system, or from the Philippines' modular and open source digital ID system. So I am delighted to see the CCAF Regulatory Knowledge Exchange taking a lead in facilitating this work. Working with over 120 jurisdictions and more than 230 organizations, it has significant potential to have impact. So let us share this knowledge and, working alongside international institutions, go that extra mile. Together, we have a unique opportunity to build an inclusive digital financial sector with the real power to improve people's lives. Let us embrace this moment, and I thank you very much for all your efforts.